Hello and welcome to the GoldSilver.com news. My name is Christian Garcia. We have a great episode in line for you today. Let's get started. The first article is from India and it's being reported by the BBC. India to review gold tax but import duty to stay. The Indian government has said it will review a new tax on unbranded gold jewelry after 11 days of protest by gold shop owners. Shops have been closed in some parts of India since the levy was announced in the federal budget on March 16th. However, authorities said they cannot budge on an import duty hike, doubling it from 2% to 4%. As you can see from the data from the World Gold Council, India is actually the largest importer of gold and has been for a while. They actually import more gold from China, Russia, and all of Europe combined, as you can see from the data. Now, gold will always play a significant role in the Indian culture. It's used for weddings, but not only that, the bigger fact is that all the gold that's bought stays within India. It doesn't go out, so it's not like they trade it or sell it back out. It stays within India. So what that means is all that supply will be permanently extracted from the gold supply, which of course helps for the prices. Now, staying with news internationally, the Telegraph is reporting today that EU to extend big bazooka EFSF bailout fund at Copenhagen meeting. Eurozone finance ministers are expected to extend part of the big bazooka bailout fund in Copenhagen on Friday, but defy international demands to radically boost the size of its firewalls. A draft agreement prepared for the finance ministers' meetings reveals a plan to retain 240 billion euros rump of the European Financial Stability Fund, or EFSF fund, until next year. The move boosts the available bailout funds to 740 billion euros from this summer, but falls short of the 1 trillion euros firewall that international leaders have been calling for. It marks a concession from Germany, but is unlikely to stem fears over the advancing debt crisis, particularly in Spain. Obviously, the EU wouldn't have taken these measures if there still weren't ongoing problems with the EU and its ongoing debt crisis. So this is just the same old story. We already know where this is going to lead to. It sounds like Spain or some other EU countries coming up next. Now, the news gets even better, switching things over here to the United States. And we have some good news for all you gold and silver holders, because Fox Carolina is reporting that a South Carolina House panel okays gold and silver as legal tender. A bill that would allow South Carolina residents to use gold and silver coins as currency has advanced. The House Judiciary Committee on Tuesday approved a bill that would let people use the precious metals as money as long as businesses agree to take them. The measure would also exempt the coins from any state sales tax and create a study committee to look at the issue. Advocates said the metal coins are more stable than the dollar. Last year, Utah became the first state in the country this month to legalize gold as silver coins as currency. As in South Carolina proposal, the law also exempted the sale of the coins from state capital gains taxes. Several other states, including North Carolina, have explored similar bills. So South Carolina joins and is now state number 2 besides Utah that is looking forward and implementing and exercising its constitutional right to use gold and silver as currency. But if you notice in the article, it states that a study committee was formed to study the issue, and before this bill was introduced and voted on, another even better study was conducted, and we have some great interesting news to reveal to you. Let's get started on that. So this bill is called Proviso 89.145. It's the gold and silver investments, and it's from the Office of the State Treasurer. Its directive is the South Carolina General Assembly directed the State Treasurer's Office to provide a report on the advisability of investing public funds in gold and silver. Below the conclusion, there is additional information regarding investment options, statutes, information, and risk assessment. What is the conclusion? Many people have seen their personal portfolios increase over the last decade when investing in gold and or silver. Individuals and private organizations take responsibility for each investment and the risk associated with them. In the public sector, it is vital to safeguard all taxpayer funds from high risk and speculative investments. While people have made fortunes with speculative personal investments, it is a different scenario when using taxpayer funds. The state treasurer, as the custodian of all public funds, believes that only accountable, responsible, and historically practiced investments are prudent to the fiscal health of South Carolina. And due to the escalating speculation in the gold and silver markets, their value has increased significantly, making it more expensive to invest and creating what could be another market bubble. And at this time, the State Treasurer's Office reports and concludes that within our office, gold and silver investments with taxpayer dollars are not advisable. So the Treasurer's Office is against using taxpayer dollars for investing in gold and silver, which has gone up in value, but they're okay with using it for bailouts and for quantitative easing, things that dilute our purchasing power. It doesn't make sense, but that's why Mike Maloney says it's a stealth tax, it's an inflationary tax. But the document gets even better, and the best part's coming up, and check this out. Gold and silver value as of September 23rd, 2011, which is when this document was created, the value of 1 ounce of gold equals $1736.30, while the value of 1 ounce of silver equals $32.65. Gold and silver as an investment. Historically, investors have purchased gold as a hedge against an economic, a political, or a currency crisis. A decline in investment markets, a growing national debt, a weak currency, increasing inflation, military conflicts, and social unrest are the most common reasons for investment in gold. Currently, gold and silver are at historic highs, leading many expert investors to conclude that a bubble has been created in the precious metals market. Since the U.S. recession began, the value of gold and silver has increased as investment markets perform poorly, troublesome economic news is announced, and when uncertainty in international markets intensifies. Similar to other commodities, the value of gold and silver is determined by supply and demand, as well as speculation. The Federal Reserve, the London Bullion Market Association, JP Morgan Chase, and HSBC Holdings have practiced fractional reserve banking and engaged in naked short selling, causing artificial price suppression. So first of all, let me clarify a few things. Yes, the value of gold and silver is determined by supply and demand and speculation, but that supply and demand part is dictated by dollars, because the more dollars they print compared to the constant supply of new gold and silver, that's more dollars chasing the same stack. So that's what it's really stating. But I gotta read this sentence again because this was the most important part of the document. Similar to commodities, the value of gold and silver is determined by supply and demand as well as speculation. The Federal Reserve, the London Bullion Market Association, JP Morgan Chase, and HSBC Holdings have practiced fractional reserve banking and engaged in naked short selling, causing artificial price suppression. Now, for years, there's been reports, accusations, allegations that JP Morgan Chase was doing that, artificially suppressing prices using naked shorts and things of that matter. And the CFTC has actually been investigating JP Morgan Chase for 3.5 years, and people like Ted Butler and others have wondered why the CFTC has taken so long to go ahead and crack down on this obvious crime in progress. Well, now we know. The State Treasurer of Carolina, through its own study, confirmed that naked short selling does exist. Artificial price suppression does exist. And this is a major revelation. We need to contact our elected officials, because what this means is that we need to enact RICO statute, because there's obviously collusion and a conspiracy to commit fraud, and it's a crime in progress. And this is a big revelation, because this is confirmation that the price of silver and gold should be higher, if not multiples higher. So what we need to do to protect ourselves is to get as much gold and silver as possible before the awareness of this situation really becomes the big news. And we need to protect ourselves from this paper currency fractional banking fractional banking Ponzi scheme. That's all we can do to protect ourselves. And this document even offers even more insights to their frame of thinking. It states that recently, with the uncertainty in global markets, the devaluation of the dollar, rising inflation, and a flat U.S. economy, there has been a renewed interest in either moving back to a gold standard, investing in both gold or silver. The value of gold and silver has significantly increased in the last decade, meaning it would cost a great deal to invest at this time. And they list risk of this investment. Number one, bars and coins. South Carolina does not have the capacity to store or have funding to secure gold or silver bullion. For these reasons, the State Treasurer's Office does not advise investing in gold or silver bars and coins. ETPs or ETFs, the annual expense and costs associated with this type of investment are high. And over time, as value increases and more investors participate in the fund, the amount of metal owned by investor decreases. And the ETPs or ETFs can also be split and sold onto the secondary market. For these reasons, the State Treasurer's Office does not advise investing in ETPs for gold and silver. Number three, certificates. Certificates for allocated gold percent and accountability problem. Allocated gold certificates are supposed to be correlated with specific numbered bars. However, it is difficult to verify a bank is improperly allocating a single bar to more than one investor. This is a conflict with the state's code of laws, and for these reasons, the State Treasurer's Office cannot advise investing in gold and silver certificates. Number four, accounts. Similar to the risk associated with gold and silver certificates, allocated and unallocated metals held in accounts produce similar accountability problems. The strength of the account holder's claim on metals is subject to the account administrator's liabilities, assets, and/or solvency. And because of this, the State Treasurer's Office can also not advise investing in gold or silver accounts. Number five, derivatives. Over the last 3 years, gold futures have traded on the New York Commodities Exchange, or COMEX, and have encountered significant accountability problems. Holders of COMEX gold futures have frequently experienced delivery delays of their metals, and once delivered, there have been many reports of inaccurate weights and serial numbers on bars that do not match the holder's contract. For these reasons, the State Treasurer's Office does not advise investing in gold and silver derivatives. Now, the state lists all these risks with investing in gold and silver, but we don't look at them at risk. If you look, the least riskiest option that the state proposed was physical bars and coins, and the only problem they have is where do they store the stuff? Well, if they have a problem storing it, that's okay. We offer a solution here. We can actually have storage facilities in the United States, Canada, Hong Kong, and now Frankfurt, Germany. So feel free, State of South Carolina, to contact us to hold your metal. And any of you YouTube watchers too, feel free to take advantage of those offers. That concludes this episode. I hope you enjoyed all this information. I know it was a little bit overwhelming at the end there, but it's very important that we understand what's going on and what's really happening now and why you still need to go ahead and continue accumulating. Remember, you can watch Tuesday's update on the Gold Mike Maloney YouTube channel, and feel free to subscribe to this channel and that channel. Again, not all the news updates are going to be as jaw-breaking, but every now and then you're going to get powerful stuff like you're getting right now, and that's why you need to subscribe. Don't forget to like us. It is the weekend, so remember to smile and enjoy your weekend. Again, contact us if you have any questions, like us, or comment. Thank you.